All right, so have you ever looked at an accounting paper and felt like you were trying to read a completely different language? You are not alone. Today, we're going to crack that code. We are going to break down a real A-level exam paper, not just to memorize answers, but to really get to the bottom of the fundamental skills it's testing.
Okay, let's just dive right in. At first glance, a paper like this, yeah, it can look pretty intimidating with all its tables and technical terms. But here's the secret, okay? There's a really simple logic holding it all together. And once you see it, all that complexity just kind of melts away.
So that's our mission today, cracking this accounting code. We're going to take this dense-looking paper and turn it into a simple, powerful framework that you can actually use. To get started, let's ask the most important question of all. Just for a second, forget about all the little calculations. What is this exam paper, and A-level accounting in general, really asking you to do?
You know, the answer is way simpler than you might think. This whole thing isn't about testing if you can be a human calculator. Not at all. It's testing three core business skills: telling a story, planning ahead, and doing a health check. Seriously, every single question on this paper fits into one of these three roles.
And here they are. First, telling the story of what a business has done in the past. Second, using that story to help plan for the future. And third, giving the business a financial health check, right here in the present. So let's kick things off with that first skill, telling the story. Okay, so our first skill is all about becoming a business historian. This is the world of financial accounting. Its main job? To look backward and report with total accuracy on what's already happened. Just think of it like a captain's log for a ship. It's recording the journey the business has been on. You know, all the sales it made, the equipment it bought, the money it owes. This isn't about gazing into a crystal ball to predict the future. It's about creating a factual, reliable record of the past. Now this is one of the most important documents in all of accounting. It's called the Statement of Financial Position. Think of it like a snapshot of a business on one single day. On one side, you have everything the business owns, its assets. On the other side, everything it owes, its liabilities, and the owner's investment, or capital. And here's the cool part. See how both sides of this table balance perfectly? That's the fundamental accounting equation in action. Assets equals liabilities plus capital. It has to balance. Let's zoom in on a key term here, a non-current asset. This is just a long-term resource. It's not something you plan on selling tomorrow. It's the big stuff, the machinery on the factory floor, the delivery vans out on the road. These are the tools the business uses every single day to make money. And on the flip side, we have current liabilities. These are the short-term debts, the bills that are knocking on the door right now. We're talking about payments you owe to your suppliers, or maybe a bank overdraft. These are the things you have to manage really carefully just to keep the lights on and the business running smoothly. So, if financial accounting is all about the past, our second skill, management accounting, is all about looking to the future. It's about taking all that historical info and using it to make smart decisions about what comes next. This is where accounting gets really strategic. It's about answering those critical questions like, hey, should we actually invest in that new machine? Or how much cash do we really need to get through next month? Or even, is it cheaper to make this product ourselves or should we just buy it from a supplier? It's not about fortune telling. It's about using data to make really good, informed choices. Okay, so we've got the past covered and we've got the future planned for. That brings us to our third skill, which is all about understanding what's happening right now. This is where you put on your financial detective hat and use something called ratio analysis to give the business a proper health check.
And a huge concept here is liquidity. In plain English, it's all about cash. If a business suddenly gets a huge, unexpected bill, can it actually pay it? Does it have enough cash on hand or stuff it can turn into cash really quickly? You know, a lack of liquidity is one of the fastest ways even a profitable business can go bust.
So to measure liquidity, financial detectives use tools like these two ratios. The current ratio gives you a general overview, but the acid test ratio, it's much stricter. It asks a tougher question. What if you can't sell your inventory? Can you still pay your bills? It literally takes inventory out of the equation, because let's face it, a warehouse full of products isn't as good as cash in the bank if nobody's buying.
And this is how we turn all those complicated financial statements into one single powerful number. After you plug in a company's data into the acid-test ratio formula, you might get a result that looks just like this, 1.22 to 1.
But so what?
A number on its own is totally meaningless. This is where the real analysis begins. What does 1.22 to 1 actually tell us about the health of this business?
And here's how you read it. A result of 1 to 1 or a little higher is generally a really healthy sign. It means that for every single dollar of short-term debt this company has, it's got $1.22 in easy-to-access assets to cover it. That's a strong position to be in. It tells us this business can most likely handle its immediate bills without breaking a sweat.
So you see, when we zoom back out, it's so clear that accounting is way more than just crunching numbers. At its very core, it's really about communication. It's about storytelling.
This famous quote says it all, doesn't it? If you want to truly understand a business, you have to learn how to speak its language. And guess what? That language is accounting.
Those statements we looked at earlier, they're basically the chapters of a company's life story. And the ratios? Well, they're the tools that help you analyze the plot, understand the characters, and maybe even predict what's going to happen in the next chapter. It's all about interpretation, not just calculation.
Which brings us right back to our final question. What is an accountant? Are they a historian, carefully writing down the past? Are they a fortune teller, using data to predict the future? Or are they a detective, piecing together clues to understand the present? The answer, of course, is that to be great at it, they have to be all three.